Housing supply is surging. Is a recession coming? This is what home buyers must know. In the second installment of our custom recession indicator series, we tackle the housing market. As a reminder, part one, we looked at the Empire Manufacturing Index and we analyzed exactly how we can look for signs of a recession as manufacturing starts to decline. Today, we're going to talk about a recession signal, specifically surging supply in new homes when there's an excess amount of homes. When does this supply become a problem and the key pivot point to watch? Now, new home sales. This is a monthly supply. It shows us the ratio of new houses for sale versus those houses sold. It indicates a number of months it takes to sell the current inventory. It's expressed in a number of months. So, for example, currently we can see 9.3. 9.3 means it would take, at the current pace of sales, 9.3 months to sell all the new homes that are on the market. This is a high number. Ideally, we want to see a level around 6 or 7. That's the median. If it's at 3 or 4, it indicates a low supply. 9, 10, 11, that's a high amount of supply. The new home's monthly supply, well, we created a term. It's called the velocity spread. How fast the monthly supply is accelerating higher. You see, it really doesn't matter if the monthly supply is 6 or maybe 6.5 or 7, but rather how fast it's going up. You see, when the monthly supply starts to surge, it means that all of a sudden the buyers have stepped away, and then now the supply is surging. That's the signal we want to look for. We can see here in blue, that's a new home's monthly supply. That's our velocity spread. In red, that's a new home's actual monthly supply. So for example, we see we went from 5.3 months to 7.3 months in less than a year. That change represents 2.4. That's a 2.4 increase in the acceleration of the new home's monthly supply. That's a sign that we're seeing that supply is really starting to surge. Now, historically, we can look to see why this level 2 is so important. This goes back to 1990, by the way. We can see here in 1990, we had a slight pullback in the economy and the monthly supply moved higher, almost hitting a level of 2, but not quite there. We then looked to the minor recession we saw in 1994, 1995. Again, we almost hit levels of 2, but remained below that. Again, when these lines go up, it indicates that all of a sudden supply is surging, not because home builders are now building homes faster than usual, but rather because now the buyers all of a sudden got scared and the supply is building up. We'll take a look at our financial recession in 2008. We went above 2, actually almost hitting levels of 3. That's how significant the financial crash and housing crash of 2008 was. More recently, during the COVID crisis, we saw the monthly supply, the velocity spread, we like to call it, cross above 2, cross above 3, almost hit levels of 4. Where are we now? We're now at a level of 1.2. Well, that's not too concerning. Again, we want to look for levels of at least 2 or greater. And again, 2 or greater indicates the amount, the velocity of which the supply is starting to surge. How much extra supply is now hitting the market with a lack of buyers, with a lack of demand? What will be the sign of a recession? If the monthly supply is greater than 12. We crunched the numbers. Currently, again, we have a level around 9. We're expecting the next release shortly. If we see that supply surge to a level of 12, that will bring our velocity spread up to 2.1. And again, 2 is that magic number. 2 is a number that we crossed above in 2008 and again more recently in 2020. Remember, the level of 2 indicates that the monthly supply is now starting to surge. Levels below 2 are representative of slight pullbacks, minor recessions within the economy, but anything above 2 is usually representative of a major slowdown in the housing market. As a reminder, we also have part one of the Empire Manufacturing Index that we studied here during our custom recession indicator series. Here we took a look at the signs of a recession during those instances when manufacturing really starts to decline at a fast rate. We hope this has been helpful. We look forward to seeing you back soon.